Okay, right. So let's get into the chart. So if you all know me, you know that I'm a price action trader. And first of all, we start by marking our key levels, which we have the blue and the red lines. And then gold normally follows a market structure. So as you can see, I'm demonstrating an example of an uptrend. The market normally moves in a series of higher highs and higher lows. So if you know gold very well, you know that normally it respects market structure. So where you're supposed to be looking for buys is at where there is a break and retest from the previous high point. For example, let me just mark my higher lows and higher highs for this particular example, one uptrend. Yeah, so we have higher low. We have another higher low there because it's higher than the previous low. Then we have another higher high, and then the last higher high. We have the last higher high this particular point. So now, if you know gold very well, you know that you're supposed to be buying at the higher low immediately after the break and retrace. So there is impulsive move, correction, impulse, correction, impulse, then correction. So immediately the correction, the market comes back to retest the previous high, which was broken. That's where you're supposed to be taking your long position. For example, after the impulse correction, then now we can take our buy positions from there. Then of course our stop loss to be slightly below that particular area. And then the second one immediately after the retest. And then you can extend your take profit and stop loss slightly below the zone depending on the candlestick patterns. Yeah, so that is how you can easily trade gold. Just by understanding market structure, you can be able to cash out on gold very easily. Yeah. Yeah, so just you need to understand the different types of markets. We have the uptrend, downtrend, and then the ranging market. And then also gold respects trend lines a lot. So we can have the first touch on the trend line, second touch, that, and then now when the market comes to the trend line for the third time, that's where now you execute your buys. Yeah, and then now fourth time, fifth, on the fifth time, it may break and then give a retest on that trend line. Then now you have a sell. So you can wait for the third touch of the trend line, the fourth or the fifth, but now, depending on the candlestick pattern, and if it retests that trend line, then now you look for sells. Yeah. So that is, those are two things that gold normally follows so much. That is trend lines and the market structure. So right now from our 4-hour, we can see that gold is in a downtrend, as you can see. Let me just remove this so that we have a clean chart. So now on this 4-hour chart, you can see that gold has been selling for about past 12 hours. It's been on downtrend. So as you can see, if you are a price action trader, again, you might know that there is a pattern that is being formed here. We have a rising wedge, some sort of pattern that is forming like a rising wedge or rising flag. So immediately you see that on your chart, then you should know that you are expecting reversals on that particular market. So gold has been bullish since NFP, but now since we have that pattern and then we also have the rejection on our resistance level there, I've marked the resistance level by the red line. So we have the rejection there, and right now we are moving in a downtrend. So we may narrow down to 1 hour so that we clearly see what is happening. Yeah. But right now, it's very clear from the past 12 hours we've been on sale. So if we go to 1 hour, then of course, we extend our chart so that we have a clear view. We finally have the same break and retest that I was talking about. If you are keen enough, you will see there was this previous high point that was taken out by this impulsive move. Then it came to retest. and then impulse, some sort of consolidation around here. Then we had an impulsive move, and then some correction, but it did not break the previous high. So we kind of formed almost an equal high, and then we have this drop currently happening. Yeah. So that means the market is no longer in an uptrend since it's failed to form a new high. So if you can remember the market structure that I was talking about, you can see there was this um, impulsive move and then correction. Just from the zone that I've marked, that's where you're supposed to be taking your buys. Immediately there is break, a retest, then now you take your buys for the two zones. Yeah, I hope you all can see that. Then immediately there's a retest, break and retest. Just the easy concept, break and retest, and then you take your buy positions. That is how I was able to take to make about 100 pips from gold in the morning. So we have our highest point for the day there. Then, of course, if you understand Fibonacci retracements, then maybe you would put it into use there because there was some rejection around our resistance level and around level 0.79 if you draw your fib level on the chart. Yeah. So as you can see, since the market failed to give us a new high, it formed almost an equal high. Then the candle closed below, it closed below the resistance level with a high volume. So that high volume signifies a trend change. And I knew very well that we were going to sell. So that is where I took my sell position. Then of course my short TP was at around there, that area. But then you can always leave it open to whichever point so that you don't limit yourself, because we know very well how volatile gold can get. That was the point that I took my sell for the day. Yeah. And of course, I'm expecting some buys to happen at around the lowest point here. Let me just mark it so that you can see. So since there was a break on that particular resistance level, now it becomes our key zone, and then now the market is trading below it. So now the last point that I'm marking is where I'm expecting to take my buy positions later on during New York session. Yeah. Then we have a push all the way up. So if you are very keen, it's the point where there was a break and retest. So we have, I normally like using a rectangle so that we can have something like a zone. So that zone is where we will be taking our buys during the New York session. Okay. Yeah, so right now, if you are still holding gold sales, you might hold them up to that key zone, and then now we look for buys. But most importantly, you have to understand market structure so that you have an easy time when doing this. Yeah. So if you understand Fibonacci, you can always extend it from the highest point to the lowest point. Since we are in a downtrend, the lowest point becomes there. And then you can see some rejection around level 0.79 and also around level 0.618. So if you understand how to use Fibonacci, you could put it into use to find your trades around that area. But for now, these are the few things that you need to understand perfectly for you to be able to trade gold comfortably. But if you are still starting your trading journey, then I'd advise you to at least omit gold from your watch list as you continue to learn, because it's so volatile and you might be caught on the wrong side if you're wrong. Yeah, so that is it on gold. Gold is one of the most traded commodities in the forex market because it's volatile. It acts as a safe haven for investors during geopolitical tensions. So most people tend to invest in gold, and since it's traded by most people, it becomes more volatile. So it gives you high value and high returns of your investment. So it's one of the pairs that if you understand perfectly well how to trade it, then you are good to go. You can only have it as the only pair in your list, and then you will be making a decent amount on a monthly basis. So if we go to the lower time frames, we can see the sell is still happening, and I'm sure it will push up to our zone, which becomes our demand zone, from after which we will take buys from the demand zone all the way to our highest level of the day. So that is it on gold, and cheers.